So we're going to go and jump into our first discussion, and we're going to ask Louise to come up on stage. We're going to dive into some of the issues that have already been raised. We're advancing in some areas, certainly some advances in sustainable finance in the region. Banks, insurers, investors are in some ways stepping up. But government is also sort of played a very critical role. What sort of policies are needed? What sort of action in terms of more transparency and accountability on financial markets? Dr. Mohieldin, in terms of introduction, if you don't know all the axes that comes from UN Special Envoy on Financing for the 2030 Sustainable Agenda. He's also chairman of the African chapter of GFANS. He's a very important partner for UNEP in the climate space and beyond. Earlier, Mahmoud, you served as UN high-level climate champion for Egypt. Very important developments into and out of Sharm el-Sheikh as his executive director at the IMF and World Bank. Both, is that right?
Well, I served at the World Bank for 10 years as senior vice president.
Okay.
Then World Bank
and IMF. And then, of course, before that, Minister of Investment in Egypt. Louise, you're a Sustainable Finance and Disclosure Specialist with IFC. Previously, you were Africa Coordinator of the Sustainable Banking and Finance Network. Today, you're practice group lead for climate finance in Southern Africa. So I would like to jump in to ask both of you, maybe Louise, I can start with you. What do you feel is so important today for the region's finance sector to build and maintain leadership around sustainability and SDGs, sort of in the big picture? And we'll certainly dig in a little bit more also to in some of the issues you raised.
Just checking this is working. Good morning, everyone. It's a pleasure to be here. Thank you very much for the invitation. And I think I'm sensing that we're actually reaching a level of maturity and starting to accelerate in climate finance in Africa, so it's a very exciting time. So as you mentioned, my previous role was as Africa Coordinator for a platform that IFC facilitates called the Sustainable Banking and Finance Network, and we have some members in the audience. It's a platform for financial sector regulators and banking associations from over 70 emerging markets. And the idea is that regulators and banking associations and other key players in the market need to be collaborating to define sustainable finance roadmaps for creating an enabling environment and actually encouraging and supporting financial institutions to innovate. Because a lot of this is new territory for everyone involved, and there's a lot of learning. There's also risk, and new sectors of sustainable finance entail new types of financing and new types of risk. And this is where IFC comes in as part of the World Bank Group. It's our job to support the financial sector to navigate into more sustainable financing, but then also to support the learning and the risk management that goes with that. And just to give you a sense of our work, it's chiefly through financial institutions that we're able to grow our portfolio for climate finance. And as of June last year, we've reached about $18.5 billion in climate financing across 160 markets. And that is through our work with financial institutions. So I think there are a number of players, including UNEP and others, that are helping to shape the enabling frameworks for sustainable finance, including taxonomies, and I think I'll touch on that as one of the critical areas where we're seeing that collaboration is essential. We know that regulations and policies for climate finance are extremely important, but this idea of labeling what are the types of projects that we want to be supporting, what are the types of sectors that we want to be supporting, that is the frontier for us to have a shared vision of where we want capital to be going. And right now, those definitions are, to be honest, all over the place. And the rules of the game are markets, not developed countries. And what we've seen is a strong appetite to do this in emerging markets, including Africa, and a tremendous commitment to how do we do this in a practical way. Let's be honest about what our economies can do, what our financial institutions need, what the real sector needs, and let's see how we can define the rules of the game in a way that we can actually start to see results. And that's what I'm seeing as the next frontier.
Great, okay. Louise, can I ask you, sustainable finance roadmaps, you talk about taxonomies. How would you break them down? What is a simple roadmap?
So a simple roadmap, and it's nice to see the members in the audience because the members of the Sustainable Banking and Finance Network are the ones that have shaped what these roadmaps look like. And typically, and Morocco is a great case in point. It was one of the case studies for how this was done. It was a collaboration across the banking and capital markets, led by the Ministry of Finance, involving lots of other ministries that had a stake in what sustainable finance looks like in the country. So we see the need to convene the key players in a country first, then to have a shared vision of what are the needs, what are the climate and sustainable finance needs in the market, what types of investments do you want to see happening, and then crafting that into a formal commitment, which can then be launched. And I think that was done when Morocco was hosting COP 26. I'm trying to remember which COP it was, but it was declared as a shared vision. This is the work that needs to be done. And in that document, actually, there's the various activities that will be done by the different regulators. We find that the countries that issue that kind of a roadmap document move very quickly on sustainable finance. And they continue that dialogue between the different agencies. Because it's critical that we don't have sustainable finance frameworks being developed just in one part of the financial sector. They have to make sense across the financial sector. Once you have the roadmap in place, you then see things like the central bank issuing guidance on how to assess climate risk and report on climate risk, which is done in Morocco. You see the capital markets regulators designing either disclosure requirements for listed companies or listing instructions or both. So listing instructions for green, social, and sustainability bonds, and Morocco, they went even as far as gender bonds. So that's typically the type of regulation we see coming in. So issuances, disclosure, prudential supervision on how you assess climate risk. And then we're seeing taxonomies come in next. Because now that you've got the risk management framework, the data framework in place, the next thing you need to do is start guiding the finance to where you want it to go. And defining what is green in a specific context, it is always going to be different. We're not ever going to have a one-size-fits-all green taxonomy. We might have a global taxonomy that guides countries, but we will always have to have differentiation at the country level, because each country is different in terms of what the market needs in terms of green finance, and also making sure that you address local social challenges.
Okay, great. Now, would you raise in your opening issues around, in many cases in the region, smaller economies, challenges around credit risk perceptions, around developing pipelines and projects, and the issue of how to adapt regulatory frameworks that sometimes are used from one region and sort of applied to the other. So how does this add up for the region here in terms of the road mapping thinking? Where is regional collaboration going to be useful in addressing some of these challenges?
Right. Let me build as well on the excellent comments by Louise on the practice of all of these kind of changes in the regulatory framework, in the policies related to financial development and innovation, and the role of market and market participants. So here we're not talking just about one body. We're talking about three major players when it comes to the financial system. We have the regulators from central banks, as represented here. We have the capital market supervisors and regulators. We have the rest of the non-bank financial institutions, including the important but not yet realized role of institutional investors, insurance companies, and the likes. This is all in the regulatory side. and adapt them in their conventional kind of work. When it comes to climate finance, I think they are playing, many of them still, a kind of a catch-up role. Some of them are taking leading role in the regions, but given the kind of lack of standardization, I wouldn't really dare to say that we have, for instance, standards related to climate finance as we see them for regulating banks based on Basel, for instance. So here the issue about regional collaboration is very much trying to chase a moving target. As Louise mentioned, some of these areas of work are still under construction, or I would add that some of them have been challenged either by the market or by some governments or regulators, including taxonomies related to ESG, for instance. So this is one area for it related to the regulators, which is actually doing fine compared to governments. Governments here, not all governments have a kind of a vision reflected on financial development policies. The regulators have the priority to make markets stable, markets respecting the rules when it comes to the rights of participants, investors, and providers of service. Governments have the role as well of linking financial policy to the rest of the public policies. And I would say that many of our economies require this kind of government leadership in designing the financial development policies, because here you would require the role of governments not just in giving the signals, but advancing some of the legal frameworks, coordinating with parliaments in order to establish some of the rules of the game in a form of law. The third, which is basically in many cases suffering from frustration, that market participants would be very much ahead of governments and ahead of regulators. They could really capture some of the new instruments and they need to apply them. They may be benefiting from some areas related to financial innovation, but they are not really seeing a kind of a conducive, supportive regulatory framework or a legal framework. So the solution to that is better collaboration between the three sides of the triangle. And we see some good examples in some countries that would really be used. When it comes to smaller economies, this is a very big challenge, because it's not just, in some cases, smaller by size, but smaller when it comes to capacity. And here, areas of collaboration is very much essential. And actually, it's not all of the case. There is no theory that being small does mean that you are deprived. Some of the smaller economies in the world, the smaller population like Singapore, are leading the way in many of the areas related to innovation. But basically, how some of these examples, like Singapore, for instance, is playing a role, capturing some of the new standards, making itself a good partner in the region, and navigating its smaller scale compared to the giants around.
Right. And it's a massive challenge, and as you say, all the actors who have to be doing their own part at the same time, signaling the others as they do it, interacting up together. Louise, can I ask you this question about even examples of how are you integrating, examples of regulators that are integrating sustainability definitions into their strategies around issues like climate and biodiversity? What's best practice today in the region?
That's a very good question. So, over a period of about 2 years within SPFN, we looked at the use of taxonomies and how they're linked to regulatory guidance across the emerging markets. As I mentioned, it really is very varied at the moment. And the question is, how do you define success? And obviously, success is you're actually moving capital. And I'd have to say that China is still ahead of other emerging markets in making that happen. When they brought in their catalog in 2015, it was a very clear signal to banks. And in 2016, China was 13% of global green bond issuance. That saved a large portion of that was into issuances by systemically important banks, because the People's Bank of China had actually directly gone to them and said, we need you to do this kind of finance. And we've wondered why we don't see the same results in other markets. The EU has some good numbers. I think by this time last year, the EU was reporting cumulative $440 billion aligned of capex, aligned with their green finance taxonomy. But even they have brought in simplification of that taxonomy as of this year, because the complexity of not necessarily the definitions, but the rules of the game related to their taxonomy created difficulties of implementation and costs, high costs for companies and financial institutions to align and disclose. And not just costs, but a feeling of, are they 100% sure that they're aligned? And how do we know that we're definitely aligned? We definitely meet all the requirements. And that's causing that general uncertainty is, I think, one of the main causes, well, I don't think, we know it's one of the main causes of delays in emerging markets where they have followed the EU rules of the game and brought in things like do no significant harm and social safeguard requirements and how do you report on alignment and how do you link that to financial sector regulation. The complexity of that has caused an issue. So, for instance, we supported South Africa to develop their sustainable finance taxonomy. It's a very good taxonomy in terms of it reflects the sectors that South Africa would need financing for. But it has a few challenges. One, it has used the EU rules of the game, which creates uncertainty for particularly the banks, to decide for sure on existing portfolios whether the assets align. New portfolio assets coming in, it's easy to align those with the rules. And the other issue is it's not broad enough. I think you mentioned market demand. Market has a demand for what kind of financing it wants to do. It's waiting for the regulators to some extent to catch up, to provide the enabling framework. In South Africa, there isn't a clear policy signal on how the taxonomy should be used. And it's not broad enough, the taxonomy is not broad enough to cater for all the different sectors where the market wants to get involved with financing. For instance, climate smart agriculture is not, or agriculture as a sector is not included. So that's a long-winded way to respond to your question. That it's in Africa, to be honest, we don't have standout cases of success yet. We have the taxonomies from South Africa and Kenya, which follow the EU model. And Rwanda, supported by GIZ, I think they've taken a slightly different, but still somewhat following the EU model. But we are not seeing significant financing resulting. The other country that I quite like as a small country for success in taxonomy is Mongolia. Mongolia took the route of doing a really simple taxonomy, which is accessible to the market, and they expanded it several times. They now link it to the SDGs. So they've created opportunities, and not just for big companies, but for SMEs as well. So we're seeing that there's a big need to make sure that the SME segment in the market has access to be able to do taxonomy-aligned activities and to be part of the supply chain for projects that are taxonomy-aligned. So that's how we're approaching success. I think as a next step, we believe that a regional collaboration, either in the Southern African Development Community or maybe in this part of the continent, that a regional collaboration on the rules of the game could dramatically solve this frustration that we have with implementation and start to move the African countries more quickly towards that type of finance.
Okay, great. So let's, on the taxonomy topic and related, I realized one of the issues of taxonomy in a simple way, maybe the Mongolian one, is kind of what is green. Of course, a lot of the economy which needs to transition is not green or not green. It's in between the many shades of green, as Mark Carney would say. So the notion of transition, how do you embed transition within the taxonomy? Would either of you like to talk about that? And then there's the next step for many people in the room. What is transition finance? How do we define that? experiences or best practices we could point to?
Well, if I may, it is not really helpful to focus on transition and finance in isolation on what's happening in the transition of the green economy. Finance here is basically an enabler to support the transition in the green economy side. And could be one of the challenges we are facing, including in Africa, when this big announcement was made in one of the major transitions when it came to energy, the just energy transition suggestions for South Africa, it was announced in Glasgow. It meant great for the country, 8.5 billion in public-private partnerships with support of contributors and donors, IFIs included. But until this moment, we're talking Glasgow like 4 years ago almost, now until this moment nothing happened. Because the issue of the management of the transition is going to be put not in the right narrative alone, but not in the right sequence when it comes to how, because we put it like that, phase out from coal, phase in renewables, and then deal with the social implications. Any kind of a better consideration for the matter could have exactly the reverse order. Test the implications on the economy and the labor market, then phase in the new energy from renewables, and then consider matters related to the phasing out. This kind of better and logical and politically aligned order would really bring a great deal of lessons, especially for other countries like Vietnam or Indonesia. Syria, which doesn't have a great deal of challenge, or that it has its own as well program when it comes to country platform. There is a new one for Brazil. So this issue of, and then we bring finance, and the transition finance here doesn't really need to depend too much on aid-based industries, because countries, governments, private sector, and even the household sector today in Africa and beyond are overwhelmed by high indebtedness. So I encourage you all in the discussions. I think we are not talking about zero debt, but it needs really to be optimized within a framework of finance that would really bring private equity, longer-term finance. And we need to do that today in a different mode when it has shrinking role of ODA, official development assistance, is shrinking. So areas that we discussed in the past related to the risking or leveraging will be required still to be there, but with new sources of ODA, part of that would be coming perhaps from doing more with less, which I think would be a challenge through efficiency, but tapping on new resources, including from the regions, in order to optimize this new model of funding.
And you talked about the concerns around credit risk and the difference between perception and reality. Is there a role for the multilateral community to help countries deal with that? What are the examples of where they're
Well, I think when I remember the discussion and IFC and the UN system and UNEP are very much of this exercise, the JET report, and I remember our IFC colleagues were presenting when we were in the Hamburg Climate Week, and we brought the great news that many of the African countries, they have better credit profile than what they are being treated. The good news is that they are better, but the bad news is that they are not treated with their good credit. What can you do? Of course, some people would say it's the substance that need to be communicated better. There could be an issue of technical assistance for government representatives and private sector representatives to showcase the credit better to the rating agencies. And then we have the other challenge. Even after you get a good credit rating or acceptable credit rating by the country, the market doesn't deal with you based on this credit. So some solutions, perhaps, as it's envisioned by the African Union, to create a public credit rating, which would be discussed with its merits or demerits. But actually, with these kind of credit ratings, you need really to communicate better to the markets and to showcase what the differences between the perception, it could be really overwhelmed by bad news that are being shared, more than the good news, either the substance of the macroeconomy or the opportunities that you are issuing your particular bond or instrument for.
Now, you talked about the South African JET and what's going on elsewhere and some of the challenges involved. You also mentioned earlier work on the credit market, on carbon credits. Do you believe the notion of financing avoided emissions, or as a new form of credit, carbon credit market instrument, are those the solutions that are needed, or what's the next generation of carbon credits?
I think Baku is remembered for the new lucky figure of finance with $300 billion. I hope that we can do better job with the $300 billion more than what we did for the $100 billion. But anyways, there will be opportunities to discuss this better. But actually, equally, if not more important, when it comes to the outcomes of the COP in Baku is the divisions of Article 6.2 and 6.4. And we here in Casablanca discussed the opportunities coming from not just from the VCMI kind of initiatives or the carbon credit market initiative for Africa, but venturing into ideas, especially the preparation for CBAM, on how can we build as well compliance markets. Questions about integrity are very much there and could be really resolved by technical cooperation, especially with the EU. China built its own market based on good EU technical assistance. As we speak, there is a very important initiative between the UK, Singapore, and Kenya to an intergovernmental initiative. But and I attended the meeting at the World Bank, and there was good representation from the World Bank Group. So, and there could be other as well means of how to translate their advances in Article 6 into opportunities in the field. The potential there, but I think we're still very much struggling when it comes to how to put these new codes in areas related to regulations and market incentives for the market participants to utilize carbon credit markets better than what we do. There is a demand, not just in decarbonization and mitigation, but as well we have seen some good initiatives, including from Brazil and Gabon and others, in dealing with matters of carbon credit access through adaptation.
Louise, on carbon markets, anything at IFC that you could mention in terms of developments in the region?
I think the critical thing is having countries define the rules of engagement for carbon markets locally, and I think we're seeing that's been a little bit slow. Carbon credits are an attractive way for African institutions to access international capital. It's very simple, it's very straightforward, and we are able to support our, particularly the real sector, manufacturing, those types of spaces, we're able to support our clients to access that type of finance. But I want to come back to what you were saying about transition finance and how we embed that in taxonomy. So there's actually an initiative, I know we're heading to the close of the panel, but there's actually an initiative globally that IFC and the Sustainable Banking Finance Network have helped to launch at Baku, which is a roadmap towards interoperability of taxonomies. And this was done in partnership with the Central Bank of Azerbaijan and in collaboration with the UN and other key partners. And one of the steps in that roadmap will be to actually look at transition finance. How can that be incorporated into taxonomies? But to be honest, that's only one part of the solution for transition finance. And there are a couple of really critical things that we need. One is countries need to have a very clear transition pathway themselves. And even in South Africa, people are asking, what is the plan? What is the actual plan? Which sectors need to move, how quickly, and in what way? So if there's an actual plan, you can reflect that in the taxonomy. And in principle, the taxonomy is already a transition tool. It's already telling you what is the green financing that needs to be part of the transition. In addition, you can do what ASEAN has done, and you can add transition category activities that aren't green now, but will support the transition. So those enabling activities, and then what they've got is a traffic light approach, so green, orange, and red. But the last thing I think which is critical, and this is where we work extensively across the region, my colleagues are here that work in North Africa, working with banks to look at what does transition look like in the portfolio. So at an institutional level, each institution is going to have a different transition pathway. And that, particularly for banks, that means what does your portfolio look like, where are your exposures to climate risk, and how are you going to address that with new products, new types of lending, new categories, new sectors that you're targeting. And I think maybe this would be my take-home message, is what's currently missing, and we're ready for it. That's what I meant by maturity at the beginning of the panel, is we now need to move into market development. Taxonomies gave us a shopping list to tackle market development across a whole range of new areas of climate finance. And each definition, each activity requires its own market development strategy. So this is the place where IFC has done this work before. We've done it in green buildings, we've done it in solar, we're now doing it in climate smart agriculture. But this will require work, it will require capacity building, creating markets, and risk sharing.
Excellent. Okay, unfortunately, we are out of time, but I think, Louise, you've done a very nice job of summing up. We're working towards market development. We need to be looking to governments, to regulators, particularly sectoral transition pathways is something that's going to be quite important to understand what's the future of the industries we're serving. And then for the financial actors to get behind that, looking towards portfolio transition pathways. How do we assess alignment? Where do we see opportunities? How do we understand the business rationale for exactly where the risks are? So with that, a huge thank you. Mahmoud, Louise, great way to get us going for the discussion. Big thank you.